So, Michael, what do you see in these numbers?
Nothing really to worry about. I mean, the big issue, as it has been for some time, is gasoline based on energy prices. And we saw a big rise in the last month. And so fuel oil prices were up by 3.7%. Gasoline prices up 3%. Over the year, gasoline is up 16%. And that's the big mover in the index. It's all coming from gasoline. Other prices seem to be very much under control. Apparel prices down on a year-over-year basis by 0.4. Food rose a little bit this month. Food at home down, though, 0.2%, up just 0.1% on a year-over-year basis. So there's really no inflation at this point that's not driven by gasoline. And as Alex knows very well, next month, that's going to reverse.
I was going to say, yeah, it's pretty ironic today that we're talking about the price of gasoline, but it also illustrates why the Fed likes core rather than headline.
Also true.
Yeah, they're keeping an eye on core, but even the things in the core that you would worry about, particularly owner's equivalent rent, basically the substitute for housing, just up 0.2 during the month, it's still under control. There doesn't seem to be any kind of breakout underway in inflation that the Fed has to worry about. They're concerned that it could reverse very quickly, particularly with wages rising, but so far there's no sign of it. It's not going to deter them in December, but the question is, do they start to pause as they get into the 2019 rate hike season? I brought a chart along I wanted to show here that it kind of sums all of this up. It's basically the CPI and the Fed, and if you look at the white line is the CPI over the decades, the blue line is the Fed, and they had to raise the Fed funds rate significantly to push down on CPI in the past. But now you look at where we are in the red box there, you don't have to do that anymore. CPI very well contained, even with the Fed funds rate very low. So it strengthens the hand of those who might want the Fed to pause.